let's go quickly through these 10 categories that we've just been through.
Sure.
Now, number one, you said that global recession happens every 8 years.
On average, yes.
And the last one was 7 years ago.
Right.
Would you like to add something?
No, I think that that you just have to sort of change your orientation. That at the start of the cycle, we were all looking for opportunities where where can we sort of see growth increase and where are the investment opportunities. I think that the orientation now is much more towards the fact that we have to be cautious. We have to look at where the risks are in the world and what can possibly cause the global recession. And beyond the point here, I mean, in terms of the fact that we have to also put this in perspective, that this is part of life, that you have global recessions.
Upturn, then you have a
yes,
downturn.
I mean, the United States has been the premier economy in the world for the last century. It's faced a dozen recessions. It's faced a Great Depression. So nothing is permanent. Impermanence is the key here.
I think the beauty of your data there is that it happens like almost on average every 8 years. People say ups and downs, but is it 20 years? Is it 5 years? So I mean, it's not going to be exactly 8 years maybe, but it's imminent.
That's right. It would seem to based on historical pattern.
Of course, second is your key point, is that China is the weakest link.
Yeah, because in terms of the amount of debt that they've taken post the 2008 financial crisis. So this is the largest debt binge that any developing country has been in. And the history of this suggests that you have a price to pay for it. And so therefore, the Chinese economy is likely to keep slowing over the next few years. Yes. I think that is a big trend.
Because they've had a 5-year 72% increase in their
debt as a share of GDP.
And you're going to have at least 5 years to pay that off because
or to sort out the problem.
No gain without pain.
Right. And so far they haven't even started. That even last year, debt grew twice as fast as the economy. Wow. So that process hasn't even started.
Okay. Yeah. The other thing you did mention, your third trend, was that Chinese flu hitting India.
Yeah, in terms of the fact that we're seeing evidence of this, because even the numbers that we spoke about in terms of how much the sales growth is down in India.
So can I just interrupt? Do you mean Chinese flu hits the world and the world hits India like that? I mean, it's not a direct link, it's an
indirect link, because the Indian exports to China are quite small. Only 5% of total Indian exports go to China. But it's the indirect effects. That is, the global economy is weak, and China is the main cause of the weakness in the global economy. That does have an effect at India at multiple levels. Right from what's happening to our sales growth of companies, because remember
exports,
that exactly in terms of a lot of these companies are very dependent on foreign sources for their revenues, and then of course export growth and even funding. It just becomes more difficult when investors across the world are more risk averse. For them to pour too much capital into the country.
The other surprising thing, we all know that commodity prices are plunging and God, they've hit rock bottom, but you're saying actually they're back to a normal average for the last 200 years. You've done the data, adjusted for inflation. And yes, they've fallen from highs, but they've not gone below the average yet.
Yeah, in terms of that's the sort of downside case. And now it's very hard to know whether they'll go below the average or not. But what this really tells you is that for the next 5 to 10 years, again, that commodity prices are likely to remain low and possibly in some extended range. And for oil, I gave you my best guess, is that in terms of that the upside will likely be capped around $60 or something a barrel, which in the olden days would have been the floor for oil prices. And by olden, I mean recent olden days, not, of course, going back more than 10 years or so. Then the floor is much lower.
The fifth trend that you're talking about is how global disinflation is linked to India and how India is affected by it.
Yeah, in terms of the fact that inflation rates have fallen a lot, but it's been driven heavily by a decline in commodity prices. And we need to just be conscious of that. That yes, prices have fallen a lot in India, but if commodity prices were to have any sort of even a cyclical rebound, as I said, that if the price of oil, even if it goes back from $35 a barrel to, let's say, $50, $60 a barrel, and that may be the cap, but that may be enough to get inflation higher again. So we have to be very sort of aware about what's been the source.
What's the source of the inflation coming down in India? And it's a global trend.
It's a global trend just now.
Now, the sixth trend you talked about was it's going to be hard for the Fed to increase rates much. That's because of the Fed being such a huge part of a global player now.
Right. I mean, as I said, the Fed is really the central banker of the world. And the Fed's actions have impacts on the rest of the world. And even though the Fed may say that its mandate is to manage the American economy, in a globalized world, it all blows back.
To America.
Yes, I mean, like back to America. And we are starting to see evidence of that.
Right.
That the weakness in the global manufacturing sector and global trade is like hurting America as well. I think there's some evidence of that which is beginning to come up. And so even though the Fed may still want to increase interest rates by 1 or 2 times more just because employment is strong in the United States, but really in this sort of a global environment, it's difficult to imagine that the Fed can do much more unless the global economy magically starts healing.
Right, right. The 7th point you raised was that, okay, India's exchange rate has gone down. We've been, the rupee is cheaper by 17%, but other countries have been their currency have fallen even further. So it's not just, again, just an Indian issue.
Yeah, and as I said, there are implications of this. It's a great time for outbound travel. And
to certain countries.
Yeah, I mean, like to certain countries and many emerging markets, it feels really cheap. And so if you haven't been to some of these countries, this is the time to do it.
And then the 8th, which I love, is this, forget the BRIC, forget all the countries. Don't even think countries now. Think FANG. Facebook, Amazon, Netflix, and Google.
For now, these are the sort of most popular trend. But I think that
the only party in town.
Exactly, but it captures what's happening in the global economy, right. Which is that it's narrowed down to really only 1 or 2 sectors doing very well just now. And the tech sector, this is in some ways what happened in the late 1990s also. The tech sector is at the forefront of this party which is happening, and it's happening largely behind closed doors.
Yeah, because they're not listing yet.
Many of them.
But what's interesting also, FANG is, again, all American. All the 4 FANG are all American.
Yeah, this is the acronym, as I said.
Yeah, it's a
people
lovely
love
acronym.
Coming up with acronyms to capture what happens any decade. They came up with BRIC last decade, but next decade there'll be something else, so we have to be mindful of that.
Your 8th trend at the moment, or 9th trend in fact, was that while India seems to be doing badly, what's holding us back?
Right, and as I said that,
yes.
Yeah, like lack of reforms in the public sector, and in particular like the public sector banks.
Right. That's a key area.
Yes, because otherwise you'll just have this slow attrition in terms of their market share. Their market value will keep dropping unless you do something radical to fix that problem. This is not time for incrementalism. This is time for something radical to happen. Otherwise, like everyone's a loser in this, in terms of it, and the only gainers are the few private sector incumbents.
Banks. In fact, the best thing for the private sector banks is the public sector banks remain. Then they'll keep growing at the expense of the public sector.
Yes, and the few private sector banks, as I said.
Right, very few.
I mean, like the incumbents who are there, but not the ones who are shut out. So I think this is one of those issues.
And if you privatize the public sector banks, the private sector banks will probably be the first to object because they'll face real competition after that.
Yeah, I think so. Yeah.
So when you say you're the best bank in the country, compared to public sector, that's not saying much.
I didn't say that.
You didn't say that. So finally, we went on to the political aspect and the turmoil in the economy and turmoil politically. And that's directly connected.
There's a global anti-incumbency wave that seems to be building. You have more and more incumbent leaders sort of being booted out of office.
Right.
And even the first month of this year, that trend is in play in Taiwan and the possible impeachment in Brazil, which won't happen now, but something that will happen over the course of the year. So I think that's something like to watch, that in this very tough economic environment, if the leadership really doesn't do something very strong, then the public is likely to get disappointed with incumbents.